Hello traders and investors, I'm L.A. Little and this is your daily NeoTA wrap. Take a look at these markets, doing it from a neoclassical perspective. That means each time we ask ourselves what happened today, what might it tell us about the coming ones? We do a show 4 times a week, every Monday through Thursday, broadcast at over 10 o'clock Eastern Time, archived on YouTube and son of a channel, L.A. Little. If you want to subscribe, just reach out in the right hand corner, do so anytime content is pushed. You'll get a notification. As far as what happened today, well, we finally got some selling, folks. It's been a while, but it did finally show up. If you look here on the indexes, all red, and not heavy losses, but decent losses, right? Anywhere from 3/4 or actually about 0.5% down to about 1%. But it was across the board. It was heavy in the ox markets. Gold breaks down. Silver's already broken down, continued down, all 2.5% to the downside. You had Europe up earlier in the day, but that didn't help our markets once we got underway. There's some buzz over there about potentially Italy's banks getting bailed out and the banking assets not having any negative effect on the depositors. Over in Asia, looks like it's starting down tonight, though slightly on the Nikkei. They were down elsewhere, most of the other markets last night. Let's pop into the charts. I'm going to start here with the gold chart. I'm going to start with the GDX. I was actually looking at this, and I'd already closed out my trading platform, so I didn't get to see the volumes there. It must have been a lot of volume coming in towards the end of the day because it really did start to swell here, and you got pretty good volume on the GDX on that breakdown. I've been telling subscribers this for a while to be concerned about this, that we probably were going to see a breakdown. And in fact, we did start seeing it here. You have a higher range up here, and if you draw it back down, you got one up underneath it, and you can keep drawing it. Actually, if I just draw it and get rid of that one I just had, you can see kind of the ranges on the way down. They're starting to blow this thing out. You got some good volume. Coming back into a big bar, you're coming down fast. Just look at the volume, not the volumes, but look at the price differential now. 31.79 was the top. You're already down almost $5. Right, which is a fairly significant decline on that amount. Somewhere in the neighborhood of what, 15% or so. I mean, that's a pretty good decline. You had 7% today actually on the decline. So that was the decline here. If I pop back over though and go to some of these others, we'd already seen some of this breakdown starting to take place. For example, in the silver market, that had already broken down. And so today we actually just got some follow through in the gold market, which up until now was unwilling to trade to the downside. But finally it also broke that little ledge that was there. You can kind of see it if you draw it out here. You can see kind of a ledge, a price ledge there. Breaks underneath it, right? Breaks a swing point low. It's going to get a trend transition finally away from bullish to sideways. And so you kind of got this big congestion area. And up here you actually have, depending on how you want to draw it, right, you kind of have that whole range thing going on up here as well. And this thing could trade back down into this big bar. And that overlap right there looks like kind of a key spot. So gold finally coming down. The gold stock's getting hammered to the tune of 15% in about a week and a half. And again, as I said, I've been telling subscribers be concerned about it. Not to be too top heavy up there and be ready to buy on the way back. And the question is where do you buy? And of course, if you want that kind of information, then you ought to join for a nominal fee, right? Get started, for as little as $15 a month. You can get my inside thoughts and quotes and my portfolio as well. And, and I know that not everybody wants to trade or even wants to try to take care of their own portfolio, and that's fine too. If you pop over here, if you're interested in me doing it, just check out the portfolio management where I manage portfolios for as little as a 1% fee per year. So you can check that out if you want to as well. As far as what else happened, I started here because the real moves today wasn't so much in the indexes as much as it was on these other markets. Kind of started with the dollar being stronger this morning, but it didn't really get that big of a bump. We know that we've got Yellen coming out and going to do whatever she's going to do in another day. We had an ABCD structure to the downside. It was here. That actually completed already, and you're starting to get a little bit of a bounce. And if you look at the lows over here, if this low sticks, right, you're starting to get kind of this, if you take the old definition, you're kind of getting that higher high, higher low thing going on, right? A lot of people like to draw channels, right? That's kind of a expanding wedge, if you want to call it that. And some people, view that as bearish. But I could see potentially, for example, I could see an ABCD structure to the upside here that would take it back up into these highs. So I don't know that the dollar is dead. A lot of people want to declare it dead. If Yellen does come out and does seem to turn a little bit hawkish, you're probably going to get a nice bump here and going to continue to suffer elsewhere. And there was an article about that that you can read up on the front page if you choose. If I pull that over, you can see it looks like it's not up yet. Maybe it will show up later tonight. These were some stock breakouts, but there was also an article having to do with the idea that we may see Yellen surprise folks a little bit in terms of her bearishness or an attempt to be bearish. The other thing that we saw was oil pull back. This is just going to continue to be volatile. But again, just like I'm talking about with some of these other charts, right? I mean, if you look at it here on the daily, this is not a bad looking chart, right? You do an ABCD structure, you overextend a little bit, now you're getting a pullback. That might just set up another ABCD structure, right, to take this thing even higher. Pull over the weekly chart and take a look at it. You can see what I'm talking about. I mean, you kind of have ABCD structures up. Now you got a deeper one. Now you're trying to come back up. And so, if you want to argue this, you can argue it either way. You can argue that, you're doing this kind of a thing and doing an ABCD structure to the top side. One could also argue, if they wanted to, that it is the turn, right, and you're potentially going to do one to the downside. I don't know which one's true in terms of just looking at ABCD structures, but what I can say is that when I look at the volumes, where we have the volume, right, that volume is mostly on these pushes, right, not on the declines. And so that part of it looks positive. The other thing that's positive is you are trying to come back in, and this is the USO. If you look at the WTI, it's a little bit different, but you are trying to come back in, and the WTI is getting fairly close here to trying to break out swing point highs and get back into that big bar. So I wouldn't call this oil market dead either. So if the oil market's not dead, if gold's pulling back, maybe it's going to bounce, maybe the dollar isn't going to go up, maybe Yellen's not going to say anything. And that's the dilemma, right? Friday's going to come up, something's going to happen. How do you position yourself for it? You want to be somewhat flat for it. You don't want to be, hanging all long and expecting Yellen to be bearish. Dovish. And you don't want to be, loaded up on things that are going to do well if she's hawkish. You want to kind of be somewhere in the middle, most likely, unless you just like rolling the dice. And I don't think it's worth rolling the dice on this or earnings or anything else. You want to roll the dice when you have a good setup and you have the probabilities in your favor, and you don't have the probabilities in your favor trying to roll the dice on whatever the news event is going to be. If we look over to the bonds are still hanging up here at the highs. They're still in a tight little range. And finally, if I move over to the euro, euro comes off pretty good today, and that should help those markets rather than hurt them. Speaking of the markets, let's go to the indexes real quick and take a look at what kind of damage we had today. So we get a pullback today. And the way it looked early in terms of the volatility picking up and stuff, you would have thought that we were having a huge pullback. But really, we're still in this little range up here. Now, if we get down here and start breaking some lows, then we might get something faster to the downside. But right now, you're not quite there. You didn't get much of a volume pickup either. Folks, this is still in a range. It's still in a range there. It's also in a range in these others. If I pull up the NASDAQ, look at it, you have the same sort of thing. It's still a range up here. It hasn't really changed. Take the prior bars up here, that's still definitely a range. So I don't think one can get all that excited about what just happened. If there's something really negative today, it's here. It's here on the Russell. And that is that you had a full reversal of yesterday's breakout. That's typically not a good thing. And so that is something I would be watching to see if you get carry through to the downside. And if you do, tomorrow in front of Yellen, then that may be a better signal. Certainly a better signal than what we see today. So you got to take away the bar on the Russell. That's the only thing that's really negative today in terms of the indexes. I did not get a chance to go over the sectors, but I don't think there was that much in the sectors. Let's just do a quick pass through these and see if there's anything there. I'll start with the transports and I'll just run through these right quick. Nothing there. Let's look at the SOX. Now the SOX comes off, but it's up huge, so there's nothing really there. XLB was breaking out yesterday. Now that's a full takeaway on the XLB, so that's the same sort of thing we just saw on the Russell. Let's see what the XLE looks like. So that's negative on the XLB. XLE is still hanging up at towards the highs. Now financials were hanging up there too. They're still doing it. They're still in a little range up there. XLI, same thing. XLK, same thing, still a range. XLP, yeah, that's not doing much. They certainly didn't see any buying today. Same thing here, didn't see it on the utility, so you didn't see a run to safety. You did see a pullback on the XLV. Now, XLV is kind of interesting because if you watch any of my Cradle to Grave series, and there's the most recent one that's published is up here. If you watch those, you know that I was trading this to the upside and I took it off and I left some money on the table. Well, folks, if I'd have stayed with it and just continued to stay with it, I'd be losing money at this point. This thing's going to come back into the swing point high over here, into this big bar. That's where one can start thinking about it again. We'll see what it looks like when it gets there. Finally, going to the XLY, range trade. And so I don't see anything hugely concerning. Let's watch that Russell tomorrow, see what kind of signal it gives. That's probably the best place. And then let's see what the overseas markets do tonight and see if they give us any clues as well. That's it for tonight. It's a Wednesday. We'll have another shot at this tomorrow before Yellen, and then we'll see what she wants to do. Take care. Good night.